Everybody, I'm Melinda Emerson, the Small Biz Lady, and I want to welcome you to another episode of the Small Biz Chat Podcast Live. I want you guys to know that I do this podcast because I love you guys, and I'm so excited to have these amazing experts here with us today. So, first up, I'm going to be talking with my guest, Jack Wilson. Hi, Jack. How are you?
Hi, Melinda. I'm great. And thank you so much for having me be a part of this.
Oh gosh, well, let me properly introduce you and then we're going to dive in. Jack Wilson is a franchise development consultant with Homewell Care Services. He's been involved in franchising since 2012. Jack also owns Results Team, a franchise consulting firm affiliated with the Franchise Brokers Association. His expertise spans the areas of franchise, independent startups, mergers, acquisitions, business growth strategies, and business exit planning. Jack's formerly owned and operated the franchise Liquid Capital of Greater Philadelphia, a certified MBE company focused on accelerating cash flow for small and medium-sized B2B businesses. For more information on his company, you can go to theresultsteam.com. And that's results spelled with a Z, y'all. So it's REZULTZ team.com. Jack, welcome to the Small Biz Chat Podcast.
Thank you.
All right, so tell us about your background. How did you get into this whole world of business? I know you had a 20-year career in corporate and telecom, but tell us how you kind of took that check and ran on into entrepreneurship. How did you do that?
Great. Well, you know what? I fortunately had an opportunity to be in a leadership continuity program with that big corporation. So they had me in 17 different assignments in 22 years. So I got a chance to go across the country. And every time I would go across the country, I was typically the highest ranking executive from our company there. So, of course, all of the chambers of commerce and economic councils would ask me to get involved, which I did. And what it exposed me to was small business ownership, because I would constantly be in front of small businesses trying to get business from bigger businesses. And that's really what piqued my interest. I've always loved small business. I started my own business when I was 12 years old, but ultimately I left the corporate world and said, I'm diving in. This is exactly what I want to do. So I did a lot of nonprofit work for organizations such as SCORE. And I started helping small businesses with their primary issues: business planning, marketing, the needs for marketing, as well as access to capital. Ultimately, I purchased a franchise. Why? To solve one of those problems: access to capital. And I actually had that franchise for over 10 years, had a great exit strategy. We'll touch on exit strategy later. Hopefully in our conversation, I'll try to bring that in. And then became a speaker for franchising with the International Franchise Association and a number of cities across the country who invited me in, as well as universities, to speak on entrepreneurship and franchising specifically.
Good stuff. Good stuff. All right. So let's dive into why I really invited you here, which is let's talk about how to buy an existing business. So often entrepreneurs come to me and they got this idea, they want to build from scratch, but that's the hard way to go into business, right? So let's talk about how to buy an existing business. What are the key factors that you need to be looking at when you are evaluating a potential business for purchase?
Yeah. So the first thing to think about is this is a different mindset. So instead of the mindset of starting from scratch, there's a phrase that's used called the acquisition entrepreneur. And that's really what you're doing here, right? And basically, generically, it is just someone who builds their career, creates wealth by buying and growing existing businesses rather than starting from scratch, like you're saying. So why is that? And how do they do that? Really, they focus on leveraging the stability in an existing business, the cash flow in an existing business, the customer base and operational structure of an established business. And that helps that acquisition entrepreneur focus on scaling it, optimizing it, and transforming that business, which most of those small businesses that you can purchase actually are in line to do. In fact, when you think about it, about only 4% of all the businesses, small businesses in the United States, do over $1 million. in revenue, annual revenue. So if you think about it, Melinda, many that are in that 500,000 and below, 500,000 to a million, never hit that $1 million mark. But what's a way to do it? Shift that mindset, look at how acquisition can help you grow. And by doing it that way, in a very simple way, although there's a lot of pieces to it, you can get to break that threshold, have something that is an asset that is sellable at the end, and really be able to zero in on not just creating the kind of lifestyle you want, but also have an asset that you can sell at the end of the day.
So, Jack, tell me, what are the actual metrics that you need to be thinking about when you look in a business? I years ago heard somebody say, when you buy in a business, you are buying somebody else's problem. So tell me, what are the things that I should be looking at if I'm considering purchasing a business?
Well, you're exactly right, Melinda. You have to be careful. So, to assess that growth potential of a business, because that's what you're looking for, right? How is it going to grow after this acquisition? There are some real key metrics, some qualitative factors that you got to consider. There's a lot of them. Things like revenue growth rate, right? And you're really looking here for like organic growth, that kind of growth rate. That's going to help you see, you know what, there's some sustainability here for financial expansion here. You're going to look at gross and net margins. Are they strong? If so, what they're suggesting is efficient operations and profitability. See, that can be reinvested into growth. Then you're going to look at some things like customer acquisition and retention rates. A lot of times people don't know to look at those, but you really want to look at things like customer acquisition costs and high customer lifetime value, that you may hear the acronym CLV. Why are those things needed? Because what that shows is a scalable customer base. Many of these businesses have grown to a certain level and have plateaued. So it's okay. It's kind of like going in and buying a fixer upper. It's good enough for the person who was in there, but when you come in, you're going to make some different changes there. But you want to see that it's got, you know how you say in real estate, this house got good bones. We're going to buy this and then we're going to build from that. Some other things you're going to look at is market share and total addressable market. Is there more to get, or is it saturated? You really want to analyze that, because scalability, that's going to be the key. If it's not scalable, then maybe it is what it's going to be. You want it to have some scalability. So what are you looking for now? You're going to be looking at things like operational efficiencies. You're going to look for things like technology. Many of these small businesses, they're backdated from a technological standpoint. Some simple investments in technology or just changes can really help. But things like that really signal the business's capacity to grow without a whole lot of proportional cost, right? You don't need a whole lot to put in to get that happening. You also
So,
want to look, go ahead.
so let me just, because I've got a lot I want to ask you. What are some of the kinds of businesses that might be good to look at? You know,
Mm.
is it service-based business? Is it product-based business? Like what, you know, I mean, because service just sounds like staff, and I gotta either find staff or keep staff or figure out if these staff is good. Like, tell me about what you need to be thinking about in terms of the kinds of businesses to go after.
Yeah, so you mentioned a couple of them that are really good types of businesses. But hey, I'm a franchise guy. So you know what I'm going to say? Look at franchise businesses. Why do you look at franchise businesses? Because you can get there faster. If you get the right franchise that fits you, that fits your investment level, that fits your timeline, that's in a good vertical. So think verticals. You always want to think verticals. Think whether it's franchise or not. The biggest industries right now, things like pet care, things like child care and educational services, things like home services, senior care, and then personal care and wellness. Those are the top ones. And then you could move into things like online e-commerce type stuff, and things like that, subscription based businesses, digital content businesses. Those are all big ones as well. But yeah, there's a lot out there that you could look at, but you want to stay in areas that are not just hot areas, but things that are good now and have growth. The senior care, I'll give you an example right now. 11,000 people a day are turning 65. By 2050, there'll be over 19 million people in this country 85 years old. That's the kind of business. I don't mean just senior care, but it gives you the metrics you're looking for to say, you know what, this is going to be in it for the long run. I can be in this, start a family legacy, have an option for my child, or have a great exit strategy. Those are the types of businesses you want to zero in on.
All right. So now I figured out this business I want to buy. I want to buy this personal care home. How do I finance that? I mean, am I writing a personal check for 1.2 million? I mean, like, tell me, what are some of the ways that I can build, a war chest? If you obviously I have to have some money, but how much money do I really have, and where can I go and get some resources to buy an existing business?
Well, there's lots of strategies. You're right. In most cases, you got to have some money, right? But when you're buying or acquiring a small business, seller financing is a big one. What does that look like? Well, that's where the seller agrees to kind of finance a portion of that sale, and they allow you to pay them back over time, usually in that 3 to 7 year range. Usually has some interest. But what that does is reduce your immediate cash requirement and allows you to spread out that cost. And obviously, you can see what some of those benefits are. That seller wants to sell, you want to buy, right? You have a vested interest, just like they have a vested interest. So usually you can make that kind of deal quicker, and it's usually more flexible than a bank loan. But speaking of bank loans, you want to really consider the SBA, the Small Business Administration. They don't do the lending, but they back the banks that lend them. So an SBA, the SBA 7A loan, it really is great for business acquisitions. They have favorable terms, low down payment requirements. Typically, they're obviously going to be lower than a traditional type loan, longer repayment periods, usually up to about 10 years, and competitive interest rates. And really, I push people in the direction to at least listen to what an SBA loan can be, so that they see if it fits them. But here's another one that I want to make sure I mention, because there's a lot of them, so many, we can't even talk about all of them. But one of them has an acronym called ROBS, ROBS. It's a personal savings and retirement account. That's what you use, your personal savings. A lot of people say, oh, I'm not touching my retirement. Well, guess what you've done? You're allowing someone else to say, I'm going to invest his money here or her money there. But this ROBS program, Rollover for Business Startups, is an IRS approved program, right? Where you can use your retirement funds in a 401k or an IRA, roll those over into a business acquisition without incurring any early withdrawal penalties or taxes. So it allows you to use your retirement funds there to finance that acquisition without taking on debt. And it's really useful for buyers who really are having a struggle with other type of financing operations or options.
All right. Well, here's the last question I'm going to ask you before we go to break. What are some of the red flags to look out for when you're looking at a business that you potentially want to buy?
Yeah, and there's again so many of those. You can just have a total piece on just the red flags. But one of the things you always want to find out right up front is you want to find out, see the financial statements and really look for things that are missing, things that are incomplete, unaudited financial records, discrepancies in the financial statements they might have, a whole lot of reliance on cash only transactions, or if they say, oh, my taxes, I don't have the taxes to show you. Those are big red flag things. Another one that's common as well is high customer concentration. So they have a $3 million business, but 2.5 million of it is with Comcast or somebody like that, right? Well, that one deal goes and you don't have that business anymore. A lot of owner dependence. So if you can determine that this business truly is reliant on that owner, and maybe replacement might be detrimental, that's a red flag, as well as declining revenue or profit trends going in the negative area. And definitely you always want to look at the legal issues, right? Are there any unresolved legal issues or compliance issues that they've just kind of been kicking the can down the road? You don't want to get caught with that can. And always an easy one is high employee turnover. All of those things are definite red flags. And there's a zillion more, Melinda.
I'm sure. I know there is. And when we come right back on the Small Biz Chat podcast, we're going to talk more with Jack Wilson about the do's and don'ts of buying an existing business. You're watching the Small Biz Chat podcast, and we'll be right back.
Are you ready to turn your dreams of entrepreneurship into a reality? Hi, I'm Melinda Emerson, the Small Biz Lady, and I want to invite you to check out SmallBizLadyAcademy.com. We're here to help you every step of the way with our comprehensive training programs and expert resources. You'll learn how to start and grow a successful business that aligns with your passions and your goals. From business systems to sales strategies, we cover it all. Plus, our supportive community of fellow women business owners is here to cheer you on and provide guidance when you need it. Don't wait any longer to pursue your dreams. Join SmallBizLadyAcademy.com today. We build businesses and we help you build the life you've always wanted.
Welcome back to the Small Biz Chat podcast. I'm Melinda Emerson, your host, and I'm here with Jack Wilson. Jack, talk to me about, I'm buying this business, but I'm buying the employees too, right? How do you assess whether or not you want to keep all of the employees that you are inheriting, and how can you smoothly bring in some new blood without disenchanting everyone that's there?
That's a great question. It is something that's absolutely vital. And it starts with the basics: clear communication and transparency. And what's the objective there? That's pretty easy. You need to build trust. And if you come in building trust with clear communications that's consistent, transparent, all of that really, really helps you. So that's where I would probably start. And then you want to, after looking at what the business already has in existence, perhaps it's time to start talking about retention bonuses, incentives to keep them there, especially the ones that you deem are the type you want. And what are you going to use as retention tools besides that? Career development opportunities. Many of these small businesses don't have a career path that they've laid out for employees. So the attrition rate is normally a little higher in that sense. But when you can show career development opportunities and show how the training will happen and things like that, it really helps people. Another strong one is when you align compensation and benefits with industry standards. They know the friends who work in the same industry. Are they getting way more in either of those areas? Well, you want to be able to do that. That's really helpful. And then you want to set the tone as the CEO of the business for the company culture. It's got to be a positive one. It's got to be one that shows that you respect the existing culture that was there. You start blending that culture that you're bringing in, and then you start building team morale. And then involve the employees in that integration process. Again, many more things that can be done, but that's a few of them.
I like that. I like all of that stuff. It's positive. It's not negative. So I appreciate it. And last question for you, Jack. What is the best business advice you've ever gotten?
It was pretty simple. Buy one, grow one, and do both of those things with your exit strategy in mind.
I love it. I love it. All right. Thank you so much, Jack Wilson. He is a franchise development consultant and my good friend. Thank you so much for being here. And when we come back, we are going to talk about how to turn your business into a franchise. We've got a great entrepreneur here. Stay with us. You're watching the Small Biz Chat podcast, and we will be right back.
Hey there, I know times are hard out here for some of y'all in business. And listen, I have a great free resource that you guys can go and get all the information you could possibly want about how to start or grow your business. It's my blog, succeedasyourownboss.com. I have over 5,000 articles there where you can get information on any topic you can imagine, from running your business on the cheap to growing your business online. So check it out. Go and subscribe today to succeedasyourownboss.com.